सपर जी मेरे ख्याल से शुरू करें।
हाँ, शुरू कीजिए।
ठीक है। भामरे जी, you can start.
Yes, sir, I am sorry. Yeah, good afternoon and welcome all members and participants for the webinar on Union Budget 22, Analysis of Tax Proposals. As you know, the Honorable Finance Minister Nirmala Sitharaman has presented Union Budget on Tuesday on 1st February. Therefore, ARI has decided to organize a webinar on the same. As you know, the ARI head office and all regions and chapters are regularly organizing webinars on various topics for the benefit of the members. We request the members to give their suggestions for the topic that to be covered, so that we'll be happy to organize a webinar on the same. Recently, Western Region has organized a webinar on business avenues with the Indian Railways, role of RDSO, and the recording of that program is available on association's website for those who have not attended that webinar. We request all of you to take the advantage and understand the procurement process of the railway. We will come out with an event planner shortly for your convenience and for ready reference. Now I invite Mr. Vinod Bansal, convener national and regional events, to address and introduce the speakers from Lakshmi Kumaran and Sridharan, top law firm of India. Thank you. Vinodji, please.
Good afternoon, friends. Welcome to the webinar on Union Budget 2022. At the outset, I would like to welcome and thank the speakers for today's webinar, partners of the top law firm, Lakshmi Kumaran and Sridharan, which are headquarters at Delhi. Our Honorable President of ARI, Savar Dharania ji, Senior VP, Shashi Singh ji, VP, Vipan Mehta ji, Managing Committee members, office bearers, and all other esteemed members are also there on this webinar today, and I welcome and thank them as well. ARI has been organizing various webinars for last several years, earlier in the physical form, and now for the last 2 years in online form as well. And it has been our endeavor to impart knowledge and knowledge sharing with all our members, and response and feedback has been very positive. In the last 2 years, we have conducted a lot of online webinars on various subjects during this COVID, and they were very well received. FM Nirmala Sitharaman ji has presented the budget on 1st February, and we are happy to inform you that in a short span of two days itself, we have been able to bring you an analysis on the provisions and implication of whatever the amendments and other things have been introduced in this budget. And I'm also very happy to say that Lakshmi Kumaran and Sridharan, they have done a lot of webinars with us in the past 2 years, and generally for budget we get 1 or 2 speakers, and then they cover all the facets of the budget. But for this webinar, they have made us available their top 5 partners to analyze each and every provision of that, and I am really thankful to them for making us available all their top experts in the field. Now I will be introducing in short all the 5 speakers in the beginning itself, so that there is no interruption in between once their presentation is started. So at the beginning, I would like to thank and introduce Bipin Kumar Verma, who is CEO and Executive Partner, having 32 years of experience in the field of indirect taxation law. And he has worked with the Department of Revenue, Central Excise and Customs for 21 years. And subsequently, then he has come to the private sector. So then he has the knowledge on both the sides of the spectrum. And that's a very, very positive thing for us, because many a times we don't understand the government's perspective on many topics. So here he has the perspective from both the sides. Mr. Akhilesh Kangsia, joint partner who sits in Bombay office. He is part of the indirect taxes practice group. Akhilesh has been advising several leading corporate houses, institutes, and companies in diverse areas of taxation, including customs, foreign trade policy, special economic zone, anti-dumping, and central excise. So he also covers a wide gambit of indirect taxation. Mr. Nirav Sanjay Karia, joint partner, and he is involved in drafting the opinions, replies to show cause notices, appeals, writ petitions, and representations before CBEC. He is also giving the advisory services mainly in the area of goods and services taxes. Nirav also represents clients before advance ruling authorities under GST for many clients. He also specializes in area of classification of goods under custom tariff and its applicable rate of taxation under GST. The fourth speaker for today is Mr. S. Shriram, partner, and he is an advocate and chartered accountant, both, and practicing before the Bombay High Court, and he handles the tax tribunals, worked on domestic tax laws, treaty interpretation, transfer pricing, business restructuring, and trust laws. The fifth speaker for today, Mr. Ratan Jain, he is also the partner, and his practice includes a mixture of litigation in the area of customs, excise, and foreign trade policy before the tribunals and quasi-judicial authorities, and advisory in the area of customs and FTP. So friends, as you must have seen from the introduction, we are really fortunate to have the services of the top advisors and experts in the field from Lakshmi Kumaran and Sridharan. And I once again thank and welcome all of them to this webinar. And I hope you have a fruitful session today, and all of us are benefited immensely. Thank you very much once again. And now I invite Mr. Bipin Kumar Verma to start the webinar.
Thank you, Vinodji, and thank you, Arya, for again inviting us. And so we have a bigger team this time, mainly for two reasons. One, will be separately covering each area of tax law, that is income tax, that is direct taxes, customs, and GST. And for all that, we have three teams, and that all are based in Bombay only, Mumbai. And this team also we are having, because this is the virtual form of presentation. So this enables us to have a longer group for a shorter period of time. Had it been a physical seminar, we would not be really having that opportunity of getting those persons. But in order to have a standby speaker, alternative speaker also, because of the connection problems, etc. So we are having two members in each team, so that there is no disturbance, no break and all that, even because of the network issues, etc. Because we are connecting it from separate areas. Now coming to the presentation itself. As you are aware that this budget proposal was presented by Honorable Finance Minister on 1st February itself. Now it's almost 2 days. So far as awareness about the budget proposals, within 2 days you would have all seen what all proposals were, etc. and all that. But the idea right now here is not to cover each and every proposal in the tax arena, but to cover the major relevant ones and cover it with a perspective of analytical thing, that what will be the applicability and how it is going to impact the industry as such. Budget always has been a very anxious event for the industry historically. And every time when the budget was to come, industry's operations would either come to halt. Everybody will be curious, like today midnight, what will be the rate, etc. And usually that sort of thing used to happen earlier. But if we observe that post introduction of GST of late, the budget is not primarily focusing on tax rate changes, etc. Budgets are more now on policy things, and therefore budget proposals mainly cater to things which are to be implemented as a policy, and rate changes, etc. if you see for GST or other laws, are around the year. It's not something which only happens at the budget announcement. And after introduction of GST, if you see, otherwise earlier major portion of tax proportion of the budget was covered by excise, etc. Then customs, etc. But post introduction of GST, now GST is a unique system where it is the GST Council which first takes decisions for any changes and proposals, etc. So therefore, whatever is introduced in the budget is already something which has been discussed and approved by GST Council as far as GST is concerned. And therefore, it's not nothing new or unexpected which you will see in budget so far as GST is concerned. But yes, there are a lot of announcements with respect to direct taxes and with respect to customs, and that too majorly on the focused announcement that is made in India as one aspect, and second is ease of doing business. So all these announcements are focusing on these areas. A lot of improvement, overhauling of the exemption notifications, redundant ones being taken off and all that. So it may be appearing to be a lot more voluminous changes, but those are not that much materialistic. Rather, these are more for aligning the laws, restructuring it for simplicity and all that thing. But whatever are the changes which are really going to impact, that is what we would like to discuss. And as the finance bill and the budget speech focused on, that is major portion was with respect to direct taxes and then customs, and very little attention was or time was given to GST, and rightly so, because of the relevance of the proposals, etc. So similarly, we also propose to do it in the same manner, that first we'll cover direct tax proposals, and we'll try to put in around 25 minutes for that, and then we'll cover customs proposals for 20 minutes or so, and for 15 minutes we'll take up GST proposals. After that, we can have questions from your side. So now I'll invite my direct tax team to take it up further for direct tax proposals, etc.
Thank you, Vipin sir, for the introduction.
Yeah.
Good afternoon, everyone. As you all would know, that Finance Bill 2022, as far as direct tax is concerned, contains various amendments. There are more than 80 clauses in the Finance Bill through which amendment in various provisions of the income tax has been made. Few amendments are motivated to give relief related to the COVID issue. Few amendments relate to overcome the judgment of the Supreme Court, High Court, or any tribunal. And then there are other amendments also. So I'll start with the first amendment. Section 14A of the Income Tax Act disallows expenditure in relation to any income which does not form part of the total income, in the sense that if a taxpayer earns any exempt income on which he is not required to pay any tax, and if he has earned any expenditure to earn that income, then that expenditure is not allowable as deduction while computing the total income. In the past, there have been doubts that if the taxpayer has not earned any exempt income at all, for example, dividend which was exempt from tax 2 or 3 years ago, then can there be any disallowance under section 14A? The courts have held that if there is no exempt income during a particular year, then there cannot be disallowance under section 14A. However, the proposed amendment in section 14A now provides that irrespective whether you have earned any exempt income in this year, there will be a disallowance under section 14A. And this amendment is applicable from AY 22-23, that is financial year 21-22 and onwards. So though dividend income is now taxable, but if you have any other dividend income, such as profits from partnership firm or agricultural income, but if you have not earned any of that income during a particular year, that is say during financial year 21-22, but if you have incurred any expenditure to earn that income, then that can be disallowed. Or if your exempt income is say rupees 10, then also the expenditure can be disallowed. But then the question comes, how much disallowance should be? Should it be restricted to the amount of exempt income, for example, rupees 10, or it can be more than that? So in 2020, the Bombay High Court had said that disallowance under section 14A cannot be more than the exempt income. So that question still remains, whether can we still argue that the disallowance can never be more than the exempt income? Based on the Bombay High Court, one can take a view that yes, if my exempt income is rupees 10, then you cannot make an addition of more than 10 rupees. It has to be restricted to 10 rupees. Second amendment which I'm discussing is related to any expenditure incurred for a purpose which is an offense either in India or outside India. So prior to this finance bill, there was an explanation to section 37(1). So section 37(1) grants deduction of general business expenditure while computing the business profits. But the explanation to section 37(1) used to provide that if the assessee incurs any expenditure for a purpose which is an offense or prohibited by law, then such an expenditure will not be allowed. Now, what used to happen in certain cases, for example, pharma companies used to provide freebies to their medical professionals. The issue had arisen whether these freebies are allowable or not. CBDT had issued a circular that freebies issued to pharma professionals is violative of the Medical Councils of India regulation, and therefore the deduction of freebies should not be allowed to pharma companies. But then the few courts took a view that the MCI regulations are only applicable to the pharma professionals or to the medical practitioners. These regulations are not applicable to the pharma companies or to the hospitals or to the laboratories. And therefore, if the pharma companies has incurred an expenditure in providing freebies to the medical professional, then this cannot be disallowed. The explanation will not apply. Similarly, if a taxpayer has incurred any, if a taxpayer has committed an offense, not in India, but outside India, and has incurred an expenditure in relation to that, then whether that can be allowed, the courts have said yes. Or if you have paid any compounding fees for compounding an offense, then that also could be claimed as deductions. But now the government says that no. First, if you have committed an offense under any law, either in India or outside India, and incurred an expenditure, it will not be allowed. Second, if you have paid any compounding fees for compounding of an offense, that shall also not be allowed. And third, if you are making a payment to a person and the person who is receiving the payment or the benefit cannot receive the payment or benefit because some other regulation or law does not, some other regulation or law bars receipt of such benefit, then the person who is paying the benefit will not be able to claim this amount as deduction. Now, one should first determine in these three amendments in relation to that, if compounding fees or any expenditure or any payment made to compound an offense, first we will have to determine whether the act committed by me, whether is it really an offense under that particular act, or it is merely a procedural irregularity. Suppose late fees for filing any form or delayed payment of tax, whether will it amount to an offense or it is simply a procedural lapse on the part of the SSE. That has to be seen. The third is while making payment of income tax, the taxpayers also are required to pay surcharge and cess wherever applicable. In the past, the taxpayers have been claiming deduction of cess and surcharge paid on the income tax. Though income tax specifically is not allowable as deduction because of disallowance under section 40, but education cess was not specifically provided in the section, and therefore the Rajasthan and Bombay High Court have said that education cess is not specifically mentioned in section 40, and therefore education cess can be claimed as deduction. But there is a recent Calcutta tribunal which said that this was never the intention of the legislature. The education cess is also forms part of income tax, and it is in the nature of income tax. Therefore, if income tax is not allowable as deduction, so how education cess, which is also in the nature of income tax, can be allowed as deduction? So based on those rulings, the amendment has been brought. Based on those rulings, the amendment has been brought that deduction of education cess cannot also be claimed as deduction. So, and it is also to be noted that this amendment is retrospective from AY 2000, assessment year 2005-2006, that is financial year 2004-5. So it is retrospective from last 16 years. The next amendment is so whenever a taxpayer takes a loan from a financial institution, so the deduction of interest is allowed only when the interest is actually paid to that financial institution or to the bank. If the interest has not been paid, then such interest is not allowed as deduction. What used to happen that the SSE the taxpayers were unable to make the payment of interest. So they used to enter into an arrangement with the financial institution that, look, I'm unable to pay the interest. You please convert this interest into a new loan or new borrowing. So then that interest used to get converted into a new loan, and then the taxpayer used to repay that new loan. But for the purpose of income tax, the taxpayer used to claim deduction of that interest that I have actually paid it by way of converting into a loan, and therefore deduction should be allowed to me. So in past, the government discouraged this practice by providing that if you have converted your outstanding interest into a loan or borrowing, then such interest will not be allowed as deduction because you have not paid any deduction, not paid the interest. You have actually deferred your in the nature of loan or borrowing. So the recently Supreme Court have held that loan or borrowing does not include debenture for the purpose of section 43B, and therefore if the interest has been converted into debentures, then it will amount to actual payment of interest and the taxpayer can claim a deduction. But this finance bills says that if you have converted your interest into debenture or any other instrument by which you defer your liability to pay to a future date, it will not amount to payment of interest. So only if you have actually made the payment of interest from your bank account to the financial institution and have not converted this into any loan or borrowing or debenture, then this will not be treated as payment of interest. But the issue still remains, if the interest is converted into equity, then what? Because what is covered is loan, borrowing, or interest, or any other instrument. So whether conversion into equity will fall in any other instrument or not has to be seen. The next amendment is relating to cash credit, unexplained cash credit. So whenever any sum is found, whenever the assessing officer notes that there is a sum which is credited, which is lying on the credit side in your books of accounts, then he raises certain questions as to who has provided you the money, whether did he have the worth to provide you the money or not. So he used to inquire about the identity, genuineness, and creditworthiness of the person who has provided the cash credit to you. So earlier, the assessees were asked to provide only were required to prove the identity, genuineness, and creditworthiness of the person who has given the loan. They were not required to prove the identity of the person who has given the money to the lender. So suppose person A takes a loan from person B has taken loan from person C. So in the assessment proceedings of person A, he will be required to prove the identity of person B, not person C. But with the proposed amendment, the person A will also have to prove the identity and creditworthiness of person C to say that this transaction is a genuine transaction and is this is not a tax evasion transaction. But if you have taken a loan from certain entities which are regulated with SEBI, like venture capital fund or venture capital company, then this will not attract. But the question remains whether trade advances or security deposits or trade deposits, whether they will get covered in the wordings loan and borrowing in section 68, it has to be seen. Or secondly, if you have taken unsecured loan, then this section may get triggered, and during the assessment proceedings, the assessing officer may ask certain questions as to who has given the loan, from whom he had taken the money, etc. The next amendment is set off of losses against undisclosed income. So whenever search takes place, the taxpayer used to assess certain additional income in the hands of the assessees, that this income was not disclosed during your original return of income. This income was discovered during the course of search, and therefore this is an undisclosed income. Now, the undisclosed income was used to be set off against the brought forward business losses or unobserved appreciation. That claim has now been negatived by the proposed amendment. Now, because of this amendment, if there is any undisclosed income which has been discovered because of a search or survey, and there are business losses or depreciation, then the taxpayer cannot set off the loss or depreciation against the undisclosed income, and he will have to pay tax on the full amount of undisclosed income. The next amendment relates to bonus stripping and dividend stripping. So earlier what used to happen is that the dividend is available to those shareholders who are shareholder of the company as on the record date. And similar was the case with the bonus shares. But the certain shareholder used to buy the shares of the companies 3 years prior to the record date, and thereafter sell the shares, and then they used to claim the short-term capital loss. So earlier these sections were limited, their applicability was limited to securities or units, but now these provisions have also been made applicable to the units of InvITs or REITs or AIFs. The next amendment is relating to updating your return of income. So this is a kind of permanent amnesty scheme. So as you all will be aware that a return of income has to be filed by 31st July, and if extended, then by the next due date. If you have failed to file your return of income by the due date, then you can file a belated return. But the time limit to file belated return as on today is only prior to 3 months from the end of the assessment year. Or if you have filed your return of income, and if you later discover certain mistakes in your return of income, then you can revise your return of income. But now the proposed section says that even though, irrespective whether you have filed your original, belated or revised return, if you want to offer certain income to tax, which you have not offered to tax in your original or revised or belated return, then you can now do it within 24 months from the date of from the end of the relevant assessment year. And this updated return cannot be filed if you have a loss, or if it will result in reduction of a tax liability, or if it will increase your refund. If any of these circumstances exist, then updated return cannot be filed. Then updated return cannot be filed by those assessees in whose case the search and survey has been initiated, or he has already filed an updated return. That means that you cannot update the updated return, or where assessment proceedings are pending or have been completed, or where the tax officer has received the information under double taxation avoidance agreements, or where a prosecution proceedings for the same assessment year has been initiated, or in certain class of persons which shall be notified by the board. So after this proposed amendment, if this is accepted by the legislature and becomes the part of the Finance Act, if you discover that you have not offered any income to tax, because in certain cases what happens that the department asks for certain information by way of issuing notice under 133A, and if that notice is issued to you that we have certain informations which relates to you, please give us details in regard to these information. And if later on it is discovered that the taxpayer has not offered certain income to tax, and in order to avoid any kind of penalty or prosecution against him, then he can offer that income to the tax by filing an updated return. Now, for filing this updated return, the taxpayer will have to pay an additional tax, which shall be 25% of the tax amount plus interest payable. Now, while computing this 25%, you will first compute the entire tax liability. And from that tax liability, you will reduce all your TDS, TCS, advance tax. And if you have already paid any self-assessment tax, then that self-assessment tax will also be reduced. But this 25% tax shall apply only when you are filing the updated return within 12 months from end of assessment year. If you are filing the updated return after 12 months from end of assessment year, but before 24 months, then you will have to pay 50% of the additional 50% of the tax. The next amendment relates to withholding tax provisions. So generally, in the cases of in those businesses where there's a dealership model, or where if a person sold certain goods, then he is given certain benefits like laptop or a fridge or a TV. Then if the income tax department was of the government of India is of the view that those persons who are receiving the benefit, they are not offering that benefit to the tax. So how do we tax that? So now responsibility has been casted on the person who is providing the benefit. Suppose there is a dealer, and that dealer has met his target during a particular month. After meeting the target, he receives a laptop. Now, as such, this laptop has been received by him because of his business of the dealership. And ideally, he should have offered the receipt of laptop as income based on the fair market value of the laptop. But that has not been offered. So now the company who is providing the laptop to the dealer, because he has met the target, now that company will have to deduct the tax at source at 10% to the person who is giving the benefit. If the benefit has been given in kind, then the company shall ensure that the entire tax has been deducted. But how that burden will have to be discharged, whether it will recover money from the dealer or how, that has to be seen. There is no clarity with regard to that in the proposed provisions. However, there are certain exclusions to that if the aggregate value of benefit does not exceed 20,000 rupees, or to that individual whose sales from the business does not exceed 1 crore rupees, then this will not apply. Next. Then there are other amendments in the withholding tax provisions. For example, that earlier when a person used to buy a immovable property, then on purchase of immovable property, he used to discharge withholding tax liability. But that had to be discharged only on the actual sale consideration. But now the section says that if the stamp duty value is more than the actual sale consideration, then the TDS will have to be deducted on the actual on the stamp duty value. And then there are certain other amendments in section relating to TDS and TCS provisions, which I'm not discussing because of the paucity of time. The next amendment relates to business succession. So in the case of amalgamation or demerger or merger, the process is lengthy and a lot of time is involved from filing of the application before the NCLT and then getting it approved. So what used to happen in the interim period is that even though the amalgamation has completed, the assessment order used to be passed on the name of the old entity. So then those assessment orders were challenged before the courts, saying that this assessment has been made on the entity which is not in existence. And therefore, how the successor can be asked to pay taxes on that. Now, the proposed amendment provides that if during the course of pendency of the amalgamation scheme or the demerger scheme, if any assessment is made on the earlier entity, then it shall be deemed that the assessment has been made on the successor entity. And the word pendency has also been defined as the period between date of filing of application till the date of receipt of the order from the court. And simultaneously, the provisions relating to notice of demand have also been amended, and also the successor company is now allowed to furnish modified return in respect of the period for which the amalgamation was sanctioned. Suppose the amalgamation is effective from 2 years prior to the current date. So earlier the new company could not file the modified return of income for those 2 years. So then the matter went to the Supreme Court, and Supreme Court said that yes, you can file the modified return. So based on that judgment, now this proposed amendment has been made that yes, the successor company can file the modified return. As you would all be aware that the government in every year sets its disinvestment targets. It holds shareholding in certain undertakings which we call public sector undertakings. But in the recent past, we have seen a trend that government is disinvesting its shareholding in those public sector undertakings and giving it to private persons. The latest example being Air India. So Section 79 provides that if there is a change in shareholding for more than 51%, then the losses will not be allowed to be set off. Now, to provide a relaxation to the disinvestment of PSUs, the Section 79 has been amended to say that if there is a change in shareholding of a PSU because of a disinvestment, then this section will not apply, and the new company can claim the losses, provided it continues to hold more than 51% of shares. Because of COVID, certain companies could not start the manufacturing operations by 31st March. They will not be in a position to start their operations of manufacturing by 31st March 2023, because Section 115 BAB provides a concessional rate of tax at 15%, which is otherwise 22%. So now that sunset date has been extended to 31st March 2024. Similarly, in case of startup also, if a startup is incorporated till 31st March 2023, then the startup will be eligible to claim 100% of its profit as deduction. Then because of these two amendments are again related to COVID. If any person has received any amount on account of medical treatment, either for himself or for the family, then that amount will now not be taxable, and the amount which shall not be taxable should be equal to the actual expenses incurred. Or if a person receives any amount on the death of his family member, then the amount received from the employer toward the death of the member will also not be taxable. The next is taxation of virtual digital assets. As the cryptocurrencies have been limelight as to how they should be taxed. If I'm buying, if a person is buying and selling cryptocurrencies, then how will he offer his income to tax? Because there is no provision prior to the Finance Bill 2022 dealing with the taxation of cryptocurrencies. But now this has been provided in the Finance Bill. They have defined what a virtual digital asset means. It has been defined in an extensive manner. It is a very technical definition. Secondly, now this proposed provision says that if you have transferred a virtual digital asset, then incomes from such transfer will be taxable at 30%. You will not be allowed deduction of any expenditure or the set off of loss from other income cannot be set off against income from virtual digital asset, but you can certainly claim deduction of the cost of acquisition of the virtual digital asset. But whether this cost of acquisition will also include certain charges which are linked with the purchasing of the virtual digital asset, like bank charges or the brokerage which is levied by the crypto exchanges, that is not very clear. Secondly, if there is a loss from sale of from transfer of virtual digital asset, whether the loss can be set off against the other income, the answer is no. The section specifically bars setting of such losses. But what if there is a loss from sale of Bitcoin and profit from sale of Ethereum? Whether that can be set off, the law is not very clear. And there is still an ambiguity that whether loss from sale of one digital asset can be set off against the other digital assets. And if you have received any virtual digital asset without a consideration like a gift, then such gift will now be taxable. And also, if there is a withhold TDS liability on the person who is making a payment to the seller for purchase of this virtual digital asset. Now he will have to deduct 1% on payment made to the seller for purchasing this virtual digital asset, and the payer will ensure that the tax has been paid before releasing the consideration to the seller. That's all from my side as far as direct tax provisions are concerned. In case you have any questions and answer, we shall be happy to answer them. Thank you. Handing over to my colleague Ratan Jain, who shall be discussing the amendments in the Customs Act. Thank you, everyone.
Thank you, Ravi.
Good afternoon to all. So from the customs side, myself Akhilesh and my senior colleague Mr. Ratan Jain will discuss budget updates and budget changes for the customs side. Our discussion will be in two parts. One will be the legislative changes, means the changes which are brought under the Customs Act and the allied laws under the finance bill, and the rest of the part will be dealing with the duty reforms under the customs law. We are just projecting our slides. Give us a 30 seconds time, please. Yeah, my apologies. So meanwhile, we are projecting the slides. I will start with the legislative changes under the customs law. One of the major changes which we see in this budget, as far as Customs Act is concerned, is making DRI as the proper officer for the purpose of Section 28 with the retrospective effect. So I will just give a background to this this action of the government, why they have brought this amendment. Last year in the March, there was a decision passed by Supreme Court in the case of Canon India. The question raised before the court, one of the questions raised before the court in Canon India was whether that DRI officers, Director Revenue Intelligence Officers, are empowered to issue a show cause notice under Section 28 or not. That was a question put before the Honorable Court. Court says that Section 28 refers to the proper officer for issuance of a demand notice for short levy or non-levy. The court says, if I give powers to all the officers on the concurrent jurisdiction, means if I give a jurisdiction to the officer who assesses your bill of entry, and also to the intelligence officer or the preventive officers, it will create a situation of anarchy, because two officers parallelly and concurrently will exercise jurisdiction over subject matter. Therefore, court, following their old decision in the case of Sayyid Ali, pass an order saying that DRI can't have a jurisdiction in terms of section 28 for issuing a demand notice on two major points. One on the concurrent jurisdiction. Second, when the section says the proper officer, it can be the only officer sitting at the port who assesses your bill of entry. To cover up that situation and to come out of that Supreme Court decision, the government has now amended sections of the custom, particularly definition of the proper officer, where they have added any officer appointed under section 5. There is another amendment made in the class of customs officer under section 3, where all these officers of the Director Revenue Intelligence and the customs preventive and audit have been added as a class of officer. In addition to this, to have an effect with the retrospective effect, they have also brought a validation act saying that this appointment of this officer as a proper officer will have a retrospective effect and will include all this officer as empowered to issue a demand notice also. So what is the basis of this and what is the outcome of this? Based on this, now government can easily say, or it will say certainly, then these people, DRI officer, have a power to issue a demand notice, and all the demand notices issued in the past can be said to have been issued with proper jurisdiction. That is one of the outcome of this decision. However, the implication of this amendment to the pending cases and the matter which has been disposed by the court has to be examined in detail, because that validation act says the matters which are pending as on date will be governed by the amendment act. So a meaning has to be understood for the word pending. What is the meaning of pending matters, and also to what will the situation which for the matters which has already been adjudicated or decided by the courts. So these two major aspects need to be examined in the greater detail, which will be having a bearing in the future. Next slide, please. So first slide. So I was on the the first slide. We wanted to cover that there were three decisions on this point. The proper officer. I have discussed on the Canon India. Canon India specifically relied on Syed Ali. The purpose of these two decisions, highlighting these two decisions, is this: Supreme Court in Syed Ali says that if we give a power to issue a demand notice, both to the officer who assesses your bill of entry and also to the other officers, then it will create a situation of chaos. Following this principle of Syed Ali, Supreme Court in Canon India says if all these officers exercise jurisdiction, it will create a situation of anarchy. Therefore, to put this situation at rest, Canon India says they can't have a concurrent jurisdiction. Highlighting this concurrent jurisdiction, they also refer to the principle of comity. We will discuss that portion when we'll come to the section 100AA, which has been introduced by this new finance bill. Next. As we have discussed that they have been put as this Director Revenue Intelligence Officer have been put in the class of customs officer. In addition to that, a subsection has been added giving powers to the board to define the jurisdiction and the functions of all these proper officers. Under this subsection, they have given various aspects which can be considered by the board while giving these powers to these proper officers. One can be territorial jurisdiction, another can be person or class of persons, goods or class of goods. Therefore, specifically for the IT products, they can appoint one custom house. So, and this is the peculiar situation in the case of faceless assessment. Take a situation, I imported some IT product in Bombay. Because they have a board think Bangalore is a hub of IT products, assessing officers or the custom officers sitting on the Bangalore have a better idea of all these products. They can have a guidelines and the function defined to the Bangalore officer to assess all the bill of entry and imports of Nhava Sheva in Bangalore for IT products. This powers is coming from this subsection 4. Next slide. as I discussed, that they have given this amendment a retrospective effect. The most peculiar part of this is the explanation they have added in the subsection in the section 5. I will read this explanation for everyone's benefit. It says, any proceedings arising out of any action taken in this section and pending would be governed by the amended law. Therefore, we have to deliberate more on what will be the effect of this retrospective amendment on the matters which has been disposed by the courts. Whether court can now then go in the appeal, can ask for the restoration of the appeal based on the retrospective amendment, that needs to be examined, and we have to see how courts react to that also. So this will take a long process again to have a precise settlement on this position of law.
At least I have one question here.
Hmm.
Suppose pursuant to this canon,
Hmm.
I already got a favorable decision or favorable order from tribunal or high court.
Hmm.
And if department has not challenged that order so far, whether that order would be binding on the department or still they can challenge that in view of this, what the proposed amendment they are seeking?
Thank you, sir. I think I missed this part of it. Firstly, these are the proposal in the finance bill. Finance bill may take a month or so to get it converted into an act. President had to sign it and everything. So they have still 1 month left. I'm not sure. I'm only guessing. Seeing this proposed amendment, whether the department can go into the appeals in all these pending matters, how court will be reacting to that applications of restoration or appeals, that has to be seen. There is a possibility using this, they will go for the appeal also, or they will go for the restoration of appeal also. But I am not very clear at this point of time how courts will react to that. So that we have to see how courts take up these matters, and certainly with the help of us, we have to argue these matters, saying that what is the meaning of a pending matter.
One thing to be noted is
Yes.
that still the time period for filing appeal, that limitation clock is not triggering because of the exemption provided by Supreme Court because of COVID thing. So
right.
Because all these cases have been dropped in last 1 year and all that.
Right, sir.
And even if department has earlier not gone in appeal, but they still have time, because that is not yet time, but they have limitation period otherwise. Right. And therefore, going to next stage for filing appeal, at least, that can be the logical step for them to keep the matter as in proceeding, basically, pending matter. Basically.
Right, sir.
But it's to be seen, that's fine. So on this issue per se, as far as like for today's audience, whatever is concerned, maybe precisely which section and all that is giving the power and all that, but to sum it up, it is that whatever Supreme Court has ordered, that has been attempted to be negated by these amendments, and meaning thereby that show cause notices issued by DRI in the past can be seen as valid notices, and those proceedings will continue.
Right, sir.
Okay.
To add further on this,
we can we can come to the next point basically.
Right. Yeah. So the earlier amendments which we have seen as far as giving DRI as a power to issue show cause notices with retrospective effect, we understand these amendment was to take care of the past cases. One of the point what was highlighted by us in the Supreme Court in the case of Canon India was that these officers are basically investigating officers. They should not issue the show cause notice. They should investigate the matter and pass on the file to the jurisdictional officers who assess your bill of entry. I think that was the understanding given before the court was well taken by the government, and they have brought this new section of 100AA, which says that all that investigation done by any custom officer, after investigation, they should pass on the file to the jurisdictional officer who assesses the bill of entry and who is the proper officer.
That was otherwise the general procedure earlier followed also prior to this. This practice got developed. Otherwise, DRI and all that, they will draft the notice and send it to the jurisdictional officer for issuance.
Correct, correct. And this was the deficiencies highlighted by the court in also the monthly impacts. So I think for that deficiency are being taken care by 110 EE. Only one more point to add on that is we also have a procedure in a special valuation bench as of now under the customs house. They investigate the matter, prepare the report, and pass on to the port of import for issuance of the show cause notice. So it looks like that is the idea behind all these amendments.
Yeah.
Now this second amendment, this amendment to section 14. So as we all know, section 14 basically provides for transaction value, import of goods. The price is determined in terms of the section and the rules. Broadly, this onus of undervaluation or overvaluation is on the department. If suppose if they allege any undervaluation or overvaluation, the onus is on the department to demonstrate that. But now by virtue of this amendment, they have enabled the board to cast additional obligation on the importer. So notification can be issued under 14, which will prescribe these are the commodities where if suppose the board feels that there is undervaluation, etc., then additional information can be sought from the importer in order to demonstrate that whether undervaluation is there or not. So this is newly inserted section, but we believe that rules also would be suitably amended in due course. So this is one of the amendment which they propose in this budget. As we all know, this advance ruling is filed to seek clarity with respect to import of goods under customs, whether classification, exemption, valuation, etc. So certain changes have been made in this advance ruling. One, they have unnecessary wordings were there like joint venture in the application, in the explanation. So those they have omitted, joint venture as well as non-resident Indian company, foreign company. So essentially what they are saying is applicant they basically simplified. So if you are importer, exporter, or the application is for a justifiable cause, then you can file. Whether you are non-resident or Indian company or foreign company is immaterial. So this is what they have amended in the section. Then earlier when the advance ruling is to be sought, that used to be very perpetual unless there is a change in the circumstances based on which the application was obtained. But now they say that this application, this order under this advance ruling would be valid for 3 years or till the time there is a change in the circumstances, whichever is earlier. So essentially, they are saying this application, this order would be valid for 3 years. So what will happen if you have got the advance ruling that is valid for 3 years? After 3 years, department that application will not be valid. Whether applicant would be allowed to file the application again, because under customs, the application can be filed for the first time import. If you already imported the goods, any commodity, then you are not allowed to file any application. So what will happen that we need to see, because there is no provision proposed for renewal of this order, etc. That is not there. What they how they have brought here this trade facilitation agreement what India has signed as a part of WTO. So there also they said that any advance ruling obtained by the importer or exporter that should be valid for a reasonable period. There also they contemplated 3 years only. So reasonable period only it will be valid. So that we need to see whether after 3 years whether it will be valid or not. Then one more thing is that earlier, no, the application, suppose if you file the application for advance ruling, you were allowed to withdraw within 30 days from the date of filing. But now that has been extended. They said now till the time this order is pronounced by the authority, you are allowed to withdraw that application. The time limit for withdrawal of the application has been extended.
Only thing, one thing to add here, Ratan sir, this 3 period of time limit is also there for other countries like Singapore, Canada, USA, where they issue the cross ruling and the customs ruling. They also have a time limit of 3 years. So looks like these are the part of commitment before the WCO to have a certainty at least for the 3 years.
Then this one more amendment which they propose is to just to protect this data protection policy of the country, because we are signatory to WTO and we have to present our data. All import and export data are we have to show to the these countries. So there, in order to protect that, what they're proposing is if any publisher who is publishing this data relating to value or classification or quantity, who is not authorized by the law. If suppose if this information is published without authority of law, then he will be punishable either 6 months or fine or both. So that amendment which they are proposing, if data is published without authority of law relating to these things, then he can be liable for punishment.
So criminal liability for publishing these data of import and exports, basically.
Now, this is also in order to ease of doing business and this trade facilitation measure. These IGCRD rules have been comprehensively revised. IGCRD, we all know that these import of goods at concession rate of duty rules, these are required to be complied with when end-use based custom notification benefit is available. So there are certain notifications which require the importer to follow IGCR rules. So pursuant to GST regime also these rules were amended, and last year also there some amendment were there allowing the importer to send these goods on job work basis. So prior to this amendment, prior to this amendment, importer was required to file manual application for obtaining the prior permission, one-time permission, etc. But now they are saying that all these applications you need not file manually; it will be on the common portal. So one-time application you file on the common portal. Once that application is approved, then you will be given a II number, identification number will be generated on the system itself. That identification number and continuity bond you have to mention in the bill of entry. As and when you file bill of entry, you import the goods. Then earlier they were requiring you to file quarterly returns, which now they say that monthly statement only you have to file. That also on the portal itself, because IGCR form 3 is there, so that you can fill up the form. And in that you need to mention about the goods sent on job work basis or to other unit, etc. All those information you have to file. This very important thing is that earlier rule prescribed, they indicated that the importer may re-export the goods, unutilized or defective goods, or he was allowed to clear in domestic market on payment of applicable duties along with interest. So therefore, there was an option given to the importer for re-export or for domestic clearance. There was no rule did not envisage that you have to mandatorily use within 6 months. So therefore, the importer was having an option to use within 6 months, or if it does not use, the position was taken by the industry that they need not pay any duty. But now these rules, what the envisage is that they have to use these goods mandatorily within 6 months. If they do not use that within 6 months, then they have two options, either to re-export or clear for home consumption on payment of duty. So therefore, mandatorily this time limit in a way they are putting under the rule.
Rather, sir, one question here. These rules are effective, if I'm not wrong, from 1st March 2022.
Yes.
What will the situation for the imports already made? Whether they will be governed by this new rules, means if I have a stock of already imported goods under the old rules, what will be the situation to those rules?
So rules, what they propose to amend, this they indicate that this would be applicable for the goods imported on or after 1st March of 2022. Goods already imported prior to 1st March 2022 would be governed by the earlier rules. Okay. So therefore, we can take that position. This is also much needed clarification. I hope you all must have seen this, because the industry was facing this problem since last more than 1 year. Pursuant to this unicorn decision, board had issued clarification in January 2020, wherein they clarified. So unicorn basically ruled if the particular notification does not grant exemption from cess or social welfare surcharge or any other levy, then that exemption would not be given to the assessee. So if notification grants exemption from basic custom duty or excise duty, then exemption alone, basic custom duty and BED alone would be given. No exemption would be given from cess. So that was the given by Supreme Court in Unicorn. Pursuant to that, board had issued circular in January 2020 that was with respect to payment of duty, basic custom duty made through scripts, MEIS or SCIS or any other scripts. So those payment also were being governed by notification issued under section 25. So you have to tender the valid scripts for the purpose of payment of duty, etc. And that was statutory exemption. But the circular clarified in view of this that this notification governing MEIS or SCIS scripts do not grant any exemption from SWS or education sales or secondary higher education sales. Therefore, that exemption would not be available. Basis that they said in the circular, they also clarified that for the past period, they will not demand the whatever amount you debited already toward the scripts we will not demand anything, but henceforth you have to pay SWS in cash. And then systems also was suitably amended, and people started making payment of SWS. But now, thereafter, this DRI and other department, they investigated, they saying that if you suppose import goods against advance license or EPCG or EOU and basic custom duty is nil, system was automatically taking this social welfare surcharge as nil. There was no option for the assessee to pay. Legally, whether they were required to pay or not was a question. So position was taken by the industry that when basic custom duty is nil, the consequential levy of social welfare surcharge, which is 10% of the basic custom duty or on the aggregate of duty, not on value, it is on the duty. So automatically becomes nil. When my basic custom duty is nil, so SWS also becomes nil. That was the position taken. But department was disputing in view of this unicorn. Now, fortunately, this circular clarifies saying that if aggregate custom duty is nil, then social welfare surcharge will not be payable. It will automatically be nil. So sometime back, half an hour back, a question came internally. We were discussing this circular whether can trigger this law. I mean, made by the Supreme Court or not. So rightly or wrongly, circular clarified in favor of the assessee, and department is binding on the circular. That position we can take. Therefore, this is welcome move. We can certainly take help of the circular. What will happen with respect to payment of SWS today, if you make through MEIS or not, that's something we need to see, because this circular does not clarify that position.
So if I put in my words, sir, if BCD is 0, I need not to count any notional BCD.
Correct.
SWS will be exempted, even though notification does not grant any specific exemption for only for SWS also. Correct.
Now, this also, which finance minister indicated, this SEZ, special economic zone, because this is poorly drafted, so they are going to replace with a new legislation. This was enacted in 2005, and there were no much amendment in this law since last more than 16 years. So now they are going to replace this, and new legislation will come, and this will be fully auto IT driven, and all risk-based checks, etc., would be there. So that they are going to do maybe by September 2022 or so. Right. Now there are certain changes in the rate, structural changes are there.
So, Ratul sir, before we start with the structural changes, when the FM given the speech of the budget changes, she highlighted two major words: Make in India and Atmanirbhar Bharat. Apart from these two words, they were also focusing and emphasizing on the word domestic capacity building. So that entire customs reform is surrounded by this domestic manufacturer and domestic manufacturing capacity building. So they will want India to be a manufacturing hub now. So on the import side, all finished goods, they are withdrawing smoothly and slowly all the duty exemptions. That is one part of it. They will also want to withdraw exemptions on the intermediate products. They want finished product, intermediate product, both should be manufactured in India. And the raw materials which are also being manufactured in India, they are also withdrawing the exemptions. Correct. So all focus is of this budget and the last budget also to withdraw the exemption on the finished goods and all intermediate products, and to reduce in the phase manner. So we will see this phase manner reduction, withdrawal of the exemptions now. Apart from this, sir, they have reformed the entire old or notification which runs into number of entries. We have seen our general exemption notification which is running under 600 entries. So what their agenda is that all unconditional notification will be shifted to the customs tariff only. There will be no need to referring of the notification. It will, all that effective rate will be part of your tariff rate now. So पहले जो हमको notification देखना पड़ता था, it will be very simple. You go your tariff, see the customs tariff, whatever rate, that will be the rate now. So all unnecessary notification has been removed. So that is the way they have transferred 414 entries in the customs tariff itself. Second is to have a more clarity. They have added new entries within the customs tariff. These first two portions of shifting the unconditional exemption and creating new tariff entries, that will come into effect from 1st May 2022. I was thinking, why have they given this date of 1st May 2022? Looks like, as they have done for the FTA Carota rules, they want sufficient time to be given to the industry to prepare for these changes. Therefore, 1st May 2022 has been given as a date for the industry and to to cope up with these changes. Apart from this, there are few changes with the rate of with the effective rate duty, which is effective from today, 2nd Feb 2022. And apart from that, they are also putting a validity period for all the conditional notifications. They don't want to give these exemptions perpetually. They want industry to approach them. If they want to get this exemption, then they only extend further. So we will see many of the notifications will have a validity period till March 2023 or March 2024. This is done in terms of last year amendment made under section 25 4A. As far as rubber industry is concerned, sir, we are there is no much change in the effective rate of duty as on date. But as I discussed, there is a shifting of effective rate and the notification rate into the tariff. So we will see this entry of 400121, 400122. This the effective rate of 25% of rupees 30 per kg, which is lower, is now applied rate with effect from 1st May 2022 in the tariff itself. So this entry is removed from the notification, put in the tariff.
This phase manufacturing may not be directly applicable for this rubber industry, but the purpose of highlighting is that now they initiated this this phasing out this exemption, whatever exemption is available. As Achilles mentioned or Bipin sir also mentioned that the concept of this budget was to make in India or ease of doing business. So in order to make in India concept, they are doing this, they initiating this process for removing the exemption in phase wise. So initially they've chosen these three products: reached wearable devices, hearable devices, and smart meters. So these are the products which in this budget they have chosen. So these products initially the exemption would be available for a year or so, and thereafter they will withdraw this exemption. So similarly for other industries also they may do like that if the intention is to do the make in India concept.
Even for the capital goods.
That is there. So this rate change for project import also, what it was stated that these concessions what the government is giving, these are hindering the growth of domestic industry, because historically the tariff rate provides 10%, but exemption on project import is 2.5% or 5% on nil. Project import basically goods falling under 9801. So now they are saying that this benefit also is not required to be given, and in a phased manner they are going to withdraw this. So tariff rate is going to change from 10 to 7.5%, but exemption what is being given till date that will continue till 30th September 2022 or 30th September 2023 as the case may be via notification. Because suppose if you have set up your if you're already having that existing registration, then you will get this exemption till 30th September 2023. But suppose if you enter a new contract on or after 30th September 2022, then you are not going to get any exemption. That then the rate will be 7.5%. So that's what the manner in which they are going to withdraw this exemption. If you see this like, so this is the rate what is going to be there. Power project, these are the projects, and these are the entries in the custom notification. So these are the existing rate 0%, 2.5% or so, which they are going to withdraw, and then tariff rate of 7.5% will be applicable. So on or after 30th September 2023, no project import benefit would be available. So even if you classify under 9801, you have to pay 7.5% basic custom duty. This is not part of budget, but otherwise we just want to highlight that this Ministry of Commerce issued notification, and 2 times they already extended this date for filing application for MEIS or ICIS. It was earlier 31st January 2022, but now 1 month extension again they've given. So you can file your application if you have not filed so far. The time limit is 28th February 2022. Beyond that, if you file, then you have to pay. There will not be any cut-off date, etc. There will not be any late fees and all. So this is the statutory time limit. You have to you can file this application up to 28th February. So with this, we conclude our custom session. Now I hand over to GST.
Thank you, Ratan. Thank you, Akhilesh. I mean, I know that there is a lot more to discuss, but the time constraint is there. And therefore, we'll quickly move on to GST part. Because hardly 10 minutes or so will be there.
Correct. Sir, we will.
Okay. Ratan, you
I
can
think the
summarize the
way.
changes under GST. What is there? The things will come into effect. Whatever proposals are there, these are proposed, and they will come into effect only when parallel changes are brought by respective states, etc. And therefore, this will be concurrently brought into effect. So you can expect minimum 1 year or so when these are brought into effect. But what is to be noted is that the changes have been made in such a manner that whenever this becomes effective, it will be with retrospective effect, and it will be treated as major from 1st July itself, 2017, since inception. So therefore, it is important to take note of these changes, start preparation for that thing. Major area is controlling the fraudulent credits or major focus of the government. And if you see, government is saying that GST revenue is buoyant. And this month revenue collection more than 1,40,000 crore, which is highest since its inception. And a major factor they attribute to this is controlling the evasion. So one thing for industry is very much clear that going forward, the organized business only is going to survive. There is a lot of data, there is a lot of data sharing, and therefore there is data analytics being used, and all sorts of techniques are used through the system. And therefore, it's high time that industry thinks of compliances seriously. Government is focusing on compliances. They are streamlining all procedures for improving the compliance. And therefore, compliance is something which cannot be ignored now. And it will be very costly for business if at all they just tend to become casual in compliances. The requirement will be, you are not only responsible for yourself, you are responsible for your vendor's taxes also. You suffer if your vendor is not properly doing some activity, not filing return and all that. Those are the major changes. Maybe Nirav, if you can just take us through very quickly.
Yes, sir. Yes, sir.
Yeah.
So, sir, as Bipin sir correctly explained, first of all, good evening, everyone. Thank you for this session. And as you know that Bipin sir correctly suggested that this will take time to implement as well as, but it will be implemented with a retrospective effect. So, sir, without taking much more time, I will just only like to focus on GST. Only there are two important things which department come to know is one, to reject the credit and to deny the refund. There are only two things which department know. So here, in this case, if you see what is the budget proposed changes is in relation to one thing is to deny the credit. That is how the credit which I will take today as a business, because input tax credit is very important for everyone as the source of liability for or the revenue for the GST department is the output liability. Likewise, every company also has an important pillar to take the credit and utilize it for making the payment of the GST liability. So therefore, it is very important that when I am paying the output liability, I should have either enough credit. That means whatever I have purchased, input service or the capital goods imported, it will be taken as a valid eligible credit and legible credit in my account. That is ECL account, that is you say electronic credit ledger. So sir, one thing which we have to see, how I will utilize the credit. They are coming up with a mechanism, why, which they are saying that unless and until the credit which is reflected in my GSTR to be presently, and in the proposed changes, they are saying it will be reflected in the auto-generated statement. That credit alone, I will be giving it to you, and which you will be eligible to utilize for the purpose of payment of GST liability. So now, sir, why this concept has come? Why they are saying that, if you have received the goods, if you have received the service, if you have received the invoice, I will not allow you the credit on that basis unless and until it is shown in the GSTR 2B or auto-generated statement. So, sir, here very important point is they are intending that once you utilize a credit, it should always be in your account and it should be not a restricted one. So therefore, they are coming up with this proposed amendment by bringing and inserting a new clause in the section 16. Section 16, as everyone is aware, it is an important section which is giving a condition for taking the credit, sir. So here they are saying that details of input tax credit in respect of said supply communicated communicated to such registered person under 38 has not been restricted. So sir, I will just like to tell you that here in GST today, me and my colleague Chaitanya Bhatt, we both are there to give you what are the important changes quickly in the GST and how you have to make your tweaking in your system today, so that whenever it is enacted, it will always be in line, because you have to work on by today itself, so that whenever you are getting the invoice, you should always ensure कि भैया उसने invoice अपना reflect किया है कि नहीं, GSTR 1 में डाला है कि नहीं, मेरे auto generated statement में आ रहा है कि नहीं, whether he has paid the GST liability, then only I can take the credit. So Chaitanya, just you can explain how I will get it and how I can take the credit quickly.
Correct. So very quickly, as Nirav correctly pointed out, initially from 1st January, they brought about by the amendment that if the details of the supplier have been communicated in the GSTR 2B, then you can take the credit. But now additionally, they've introduced this section BA, which is saying that even though if it is communicated, but this particular credit should not be restricted under section 38. Now, section 38 of the CGST Act, as you may be aware, initially provided for this matching. It was a matching concept. That is, it provided for furnishing of the returns of the inward supplies. They have completely done away with this two-way communication of matching. That is, when supplier is uploading in his GSTR 1 and recipient will accept it, etc. All that has been completely done away with. And they are simply saying that based on certain actions of the supplier only, your credit will be accepted or it will be denied. So because of this, now entire section 38 has been amended, where they are saying that whatever details are communicated by the supplier, that you can take the credit. But there are also certain conditions where they are saying that if supplier has done certain defaults, then in those cases, the credit shall not be available. So even so, Nirav and Vipin sir, due to the default of the supplier, all these, they are putting restriction on the recipient to disallow the credit. So few conditions are there that if the registered person, he has defaulted in the payment of GST and the default is continuing for some particular period, they are saying credit will be denied. Also, another situation where in the GSTR 1, 100 rupees is declared, but in the GSTR 3B, you've paid only 80 for whatsoever reason. Then also they are saying that because the supplier has paid lesser amount of 80 rupees, therefore the credit will be denied to you.
तो चैतन्य, यहाँ पे मैं बोलना चाहूंगा, या फिर आई जस्ट लाइक टू गिव यू अ क्वेश्चन हियर कि यार बेसिकली उनको मालूम कैसे पड़ेगा कि मेरे सप्लायर ने मेरा इनवॉइस पूरा पे किया है कि नहीं. सी ऐसा हो सकता है कि वो सप्लायर मुझे तो सेल नहीं कर रहा है, वो हार्डली कभी ऐसा कोई सिचुएशन हो सकता है कि मेरा सप्लायर के लिए मैं ही खाली एक लोन कस्टमर हूँ, मतलब सोल कस्टमर हूँ, बट जनरली मेरे सप्लायर के लिए तो कितने सारे कस्टमर होंगे. अभी उसने कौन से कस्टमर का पेमेंट किया है या नहीं किया है, हाउ इट विल कम टू नो टुडे. So isn't you think that this is so harsh कि भाई मुझे पता ही नहीं. हाँ, जब तक ये था कि उसने पे किया है कि नहीं पे किया है, तब तक I can understand that condition was very well and it can be at the most we can fulfill because of the business relation ऐसे ही चलते हैं. Like I can ask him कि भैया you have paid the GST or not. But now today I have to not only ensure कि that statement is reflected in my account or not, plus also I have to ensure कि मेरे invoice जिसका मैंने उससे सप्लाई लिया हुआ है, वो उसका भी उसने पेमेंट किया हुआ है कि नहीं. ये बहुत डिफिकल्ट है बिकॉज सिस्टम डे टू डे बेसिस पे कितने सारे इनवॉइस इशू होते हैं. सेकंड मंथली बेसिस के ऊपर वो जब जीएसटीआर स्टेटमेंट आएगा, डोंट यू थिंक ये सिस्टम हैंग हो जाएगा और आगे इसको कर भी कैसे सकते हैं. तो आज की तारीख में जब ये आगे एनेक्ट होगा और आगे जब ये एनफोर्स होगा, वो तो तब की बात है कि टिल दैट टाइम मैनी सिस्टम में कम कॉम्प्लिकेशंस में ऑल्सो कम, शायद तभी तक मेरे ख्याल से वो क्लैरिफिकेशंस और रूल्स भी आ जाएगा. बट चेतन, यहाँ पे अपनी जितने भी जो ऑडियंस है उनको अगर हम बोल सकते हैं कि फ्रॉम टुडे इटसेल्फ यू मेक अ सिस्टम दैट इट इज इम्प्लीमेंटेड फ्रॉम डे वन, दैट इज टुडे इटसेल्फ. सो व्हाट यू शुड डू, आपको ये देखना है कि आपको अपने परचेज ऑर्डर के अंदर ये डाल देना है कि भाई अगर मैंने आपसे कोई भी सप्लाई लिया हुआ है गुड्स सर्विस कैपिटल गुड्स का, आपको इंश्योर करना है कि आपने ये मेरे स्टेटमेंट में दिखना चाहिए, प्लस आपने ये मेरे को जीएसटी पे करने का प्रूफ देना चाहिए, तो ही मैं आपका पैसा जीएसटी का रिलीज करूंगा. मतलब समझो अगर मैंने किसी से 100 रुपए का सप्लाई लिया है और 18% जीएसटी है, 100 रुपया तो मुझे देना ही देना है, बट 18% मैं तभी दूंगा जब तू मुझे ये दोनों चीज का बताएगा एक तो मेरे स्टेटमेंट में दिख रहा है, सेकंड you have paid this by way of showing it in your GSTR 3B, then only I will pay this amount to you, otherwise I will not take the credit and I will not pay this amount to you. Now second consequence is that कि अगर मैं उसको नहीं पे कर रहा हूँ, उसका क्या consequences है, वो contractual consequences है, but GST consequences कुछ नहीं होना चाहिए.
Correct. Very correctly summarized and pointed out by you, Nirav. And secondly, all these things, as you pointed out, that registered party was defaulted in payment. मेरे सप्लाई का मैं कैसे अराइव करूं? How I will know कि उसने मेरे सप्लाई का पे किया हुआ है, नहीं किया हुआ है, whether he has correctly utilized his ITC, ये सारे conditions, how will I determine? So here they have only proposed these changes enough. So I think they are also, since they have specifically said that it is going to be in the prescribed manner, we have to wait for the rules also how these conditions are going to be fulfilled.
No, Chaitanya, why I am telling you, because today what we are seeing is from like 2-3 clients, they were saying us,
correct,
that system is doing such a way कि जैसे you know that in 36(4) पहले उन्होंने कैसे 20% दे रहे थे कि नॉन रिपोर्टेड इनवॉइस का, फिर बाद में उन्होंने धीरे धीरे जनवरी 20 के अंदर उन्होंने 10% कर दिया, जनवरी 22 के अंदर उन्होंने पूरा 5% कर दिया, एंड जनवरी 22 के अंदर उन्होंने 0 कर दिया. बट सिस्टम ने क्या कर रहा है कि कुछ जगह पे कुछ जुरिडिक्शनल पर्सन ऐसे कर रहे हैं कि अगर मेरे आईटीसी में मोर देन 10% का अगर डिफरेंस है,
करेक्ट,
तो मैं आपको एक एरर थ्रो कर रहा हूं, और आइदर आपको एक नोटिस आ सकता है, और वो नोटिस के अंदर ये भी लिखा सकता है कि रूल 21, प्लीज ध्यान रखिए, सुनिए, रूल 21 ऑफ द सीजीएसटी रूल्स, उसके अंदर लिखा हुआ है कि अगर इफ देयर इज अ वायलेशन ऑफ provisions of section 16, then the registration will be cancelled. And Chaitanya, one more thing, the harsh point is there was a concept of giving the opportunity for hearing before the registration got cancelled. They removed that also.
Right.
So don't you think that they are going more harsh? They are going more harsh. So that's what we have to be very cautious. We have to be very you can say
very
careful while taking the credit, as well as it is not only reflecting in my statement also. So obviously after this session, when we will take up for GST Q&A, I think we expect many questions on this point, but we should also thrive more on this point to say, because your credit is always a backbone of any business.
Correct. Absolutely correct.
You can take the next point, Chidana.
Correct. Next point also, this section 41. This section 41 initially allowed a provisional claim of the ITC and subsequent utilization of that. Now, after this amendment of section 38, they are correspondingly also amending this section 41, where they are saying that input tax credit can be availed basis self-assessment only. Second, they are also specifically saying here that if supplier has not paid the tax to the government, then I have to reverse it. Whatever credit has been availed has to be reversed along with the interest. So, Nirav, there seems to be and Vipin sir, there seems to be a slight overlap between the section 38 and the section 41. Because in section 38, they say that if the supplier is defaulting in the payment of the taxes, then automatically at the threshold stage, you are not allowed the limit. So are they saying that, okay, even you are not allowed the threshold limit, but subsequently you still avail that input tax credit? And now they are asking us to reverse the credit along with interest. So there seems to be slight of an overlap. And it seems that if I'm availing the credit and then they are coming for recovery, then this particular section will apply. That is one thing. And second thing is that when they are saying availed along with interest, so here the words used are availed along with interest. So, but the amendment, if we are seeing, there's a section 53 amendment has come where only where credit has been wrongly availed and utilized, there the interest will be applicable. So here I think Nirav and Vipin sir, we have to say that section 50 only will be applicable here. Only if it is utilized the credit, then only the interest should be applied.
Correct.
Yeah, absolutely. Refers applicable interest. So applicability has to be there.
Absolutely.
Applicability has to be seen first. Okay. That's fine.
So as Nirav correctly explained, you have to particularly see the contractual clauses.
तो चेतन यहाँ पे दो चीज इंपॉर्टेंट नहीं देख रहे कि जैसे सेक्शन 38 अगर मुझे एब इनिशियो लेवल पे ही अगर रिस्ट्रिक्ट कर रहा है क्रेडिट लेना, तो 41 जब बोल रहा है कि मुझे अगर क्रेडिट अगर रिवर्स करना है, देयर शुड मतलब बेसिकली द 41 जो बोल रहा है कि आई हैव टू रिवर्स द क्रेडिट इफ द सप्लायर इज नॉट पेड द टैक्स, ये दोनों एक साथ कैसे होगा? लाइक 38 में तो ऑलरेडी उन्होंने बोला है कि भाई अगर आप सप्लायर ने टैक्स पे ही नहीं किया है तो मैं उसको आपके सिस्टम में आने ही नहीं दूंगा। तो अगर मेरे सिस्टम में ही नहीं आएगा तो 41 में कैसे आएगा? ये भी एक इम्पोर्टेंट पॉइंट है जो उनका क्लैरिफिकेशन आना बाकी है। आई थिंक मेरे ख्याल से
38 is only a provision effectuating, because question is date for taking credit is 20th of next month maximum will be utilizing, whereas the other party also will be paying only on 20th on. Vendor will pay, so therefore it can never be known in advance whether he has paid or not. So section 38 is creating the credit, so therefore in that month you will always avail whatever has come in GSTR 2B, irrespective of GSTR 3B payment, will be available as credit. Okay, in the same month. Question is next month when, and this was the scheme earlier also. So question is next month when they get 3B of all and then they come to know that so and so has not paid. Now that amount is to be recovered. Earlier section 41 to this extent said the credit which has been given is provisional. Now they have removed the word provisional, so that okay, you will take the credit as self-assessed. Whatever is self-assessed, you have taken. And if the payment has not been made, next question is how the person will be communicated what payment has been made by vendor and what not. On that basis, as per 41, again this is creating liability that the credit becomes reversible along with interest. Okay, so that's fine. I think we are already overshot the time.
Sir, last point we just wanted to cover regarding one interest relaxation in time limits. I think everyone is aware.
Everybody is knowing.
They have increased the time limit for taking the credit of any financial year. Like they have only given 1 month. Sir, ये थोड़ा एक important point है, just we wanted to highlight. If you just allow me a minute.
Yeah, please.
Yeah. So, sir, this is the, you can say a benevolent provision also. You can say benevolent, you can say section which they are doing with a retrospective amendment, where they are saying that के पहले एक्साइज के टाइम पे ये हमेशा इशू हुआ करता था कि आपने अगर कोई भी सेनवेट क्रेडिट लिया हुआ है एंड देन आप उसे रिवर्स कर रहे हो, रॉन्गली अगर लिया हुआ है एंड देन यू आर रिवर्सिंग इट, तो हमेशा डिपार्टमेंट बोलती थी कि भैया आपने एक बार अवेल्ड कर लिया है, चाहे आप उसे रिवर्स करके यूटिलाइज करो या ना करो मुझे पता नहीं, आपको इंटरेस्ट भरना पड़ेगा. देन दैट मैटर वेंट टू सुप्रीम कोर्ट. इन स्विफ्ट में अंदर उन्होंने डिसीजन दे दिया एंड देन दे सेड अमेंडेड द सेक्शन बाय सेइंग दैट के रूल्स जो अमेंड हुए थे 14 दैट इंटरेस्ट जब भी लगेगा जब भी अवेल्ड एंड यूटिलाइज हुआ है. मतलब आपने अगर 100 रुपए का क्रेडिट अवेल्ड कर दिया है, पर अगर आपने पूरे 2 साल तक अगर आप वो पोजीशन में हो बताने के लिए कि मैंने वो 2 साल तक वो क्रेडिट मेरा इंटैक्ट था, मैंने यूटिलाइज नहीं किया, भले गलत क्रेडिट था बट मैंने यूटिलाइज नहीं किया, तो आपको इंटरेस्ट नहीं लगेगा. ये एक्साइज में सेटल पोजीशन था. जीएसटी के अंदर थोड़ा प्रॉब्लम आया था बिकॉज ऑफ द सेक्शन. नाउ दे हैव फर्दर क्लैरिफाइड इट and given a very good, you can say a welcome provision, I can say from a budget. उन्होंने retrospectively 1 जुलाई 2017 से उन्होंने बता दिया कि अगर आपने कोई भी क्रेडिट गलती से लिया हुआ है और वो रिवर्स कर रहे हो आज बिकॉज ऑफ इंटरनल थिंग और ऑडिट में पता चला, जीएसटीआर 9 में पता चला, डिपार्टमेंट के ऑडिट में पता चला, व्हाटएवर, बट इफ यू आर इन अ पोजीशन टू शो कि आपने उसे यूटिलाइज ही नहीं किया है तो आपको इंटरेस्ट भरने की जरूरत नहीं है. ये सेक्शन से हम क्या बेनिफिट ले सकते हैं? एक, अगर आपका कोई ऑलरेडी लिटिगेशन चल रहा है ये पॉइंट के ऊपर फॉर प्रायर पीरियड, ये सेक्शन दिखा के वो हम उसको ड्रॉप करवा सकते हैं या नहीं करवा सकते. ये एक फर्स्ट पॉइंट है जो हम सोच सकते हैं इससे बेनिफिट लेना. सेकेंड, हम इससे एक चीज और देख सकते हैं कि हम हमारा इंटरनल सिस्टम क्रेडिट का आज की तारीख में रिव्यू कर सकते हैं. फिर से मैं बता रहा हूं, हम हमारा इंटरनल सिस्टम आज की तारीख में रिव्यू कर सकते हैं और जहां जहां पे जो क्रेडिट्स हमने गलती से ह्यूमन एरर के कारण नॉन यू कैन से लॉ पॉइंट, इंटरप्रिटेशनल पॉइंट के कारण अगर हमने ले चुके हैं, वो आज हम उसे रिवर्स कर सकते हैं. और अगर हम बता सकते हैं कि उसको हमने रिवर्स करने के टाइम पे वो यूटिलाइज नहीं किया है तो इंटरेस्ट पे करने की जरूरत नहीं है. इंटरेस्ट पे करने की जरूरत नहीं है. देयर आर डिसीजंस ऑफ हाई कोर्ट आल्सो, मदुरा कोर्ट्स एंड ऑल, बॉम्बे हाई कोर्ट. सो डिसीजंस भी है आज की तारीख में. यू डोंट हैव टू वेट इवन फॉर दिस सेक्शन टू कम इनटू फोर्स. इट इज ऑलरेडी गिवन इन द जीएसटी काउंसिल मीटिंग इन लास्ट 45th मीटिंग आल्सो कि ये आपको करना है. प्लस इंटरेस्ट का सेक्शन 18% ही लगेगा. सो ये बहुत ही अच्छी चीज है इंटरनल रिव्यू करने के लिए आप लोगों को आज की तारीख में. So this is a very, very welcoming session from the budget, I can say.
Correct.
Yeah, you can move to next.
Yes. Okay. So these are this relaxation in time limits. So ये तो 30th November सब हो गया है. We're not going on that. These are provisions where just sequence.
मतलब ये वही कि अगर आपने पहले के महीने का फाइल
नहीं किया तो आपको ये करना पड़ेगा.
That is okay.
ये सारे सेक्शंस ओमिट कर दिए मैचिंग रिवर्स से रिलेटेड.
This clearly shows कि matching principle will not anyway come. ये गया.
Correct. Yes.
ये composition dealers है.
इसमें भी क्या cancellation of registration if you are not furnishing any returns for continuous tax period. पहले 6 महीना था, अभी continuous tax period हो गया है.
नहीं वापस एक बार slowly for normal persons.
A normal person.
Other than composition.
There is a composition person. The return has to be return for a financial year beyond 3 months from due date has not been furnished. Earlier there were 3 consecutive tax periods. Now they've made it 3 months from due date.
Meaning for other registered person which is other than composition के लिए.
Other than this thing, it is continuous tax period. 6 months time limit has been, they've removed it and instead they are saying continuous tax period.
So it will be prescribed that what will be the meaning of continuous tax period.
Correct.
Okay.
This also, whatever electronic cash ledger I had, it used to, if I had paid in CGST, but I had to deposit in IGST, so that transfer was allowed. Now they are saying that even अगर आपका एक distinct person और दूसरा distinct person में भी आपको transfer allow करेंगे.
It is. Okay, this is only prescribing the form.
Correct. And ठीक है. Applies to SEZ में.
I think we can open for the Q&A. I think Bipin sir.
Then Mr. Bhambre may look into it. You know.
Yes, please. Yeah. Thank you.
Bhambre, if there is any raise of hands or any questions in the chat box, then you can just you can ask a few questions. You know already because the time limit.
Time limit is already over. So
you
we'll ask the audience to please send your questions. We'll have it forwarded to you and they will reply your questions.
Any 1 or 2 questions you may just answer. You know, everything should not be taken. Any 1 or 2 questions if there is in the chat box, you can refer to Mr. Verma if you find. At least 2 questions you should.
Mr. Verma, this one question from me, Vinod Bansal. It has been a good webinar where you have covered most of the provisions, etc., related to direct and indirect taxation. But one thing like in GST, if the payment is not made for 180 days and then you have to reverse the credit. So can you throw some light on that? And will the new provision that if you have not utilized it, then there is no problem. So if you have a balance that time, that even with the reversal, it would not have attracted. So that is one thing. Another problem which quite a few of our members face is they have a lot of balances lying in their account and it's not being utilized for various reasons because maybe their input tax is at a higher rate and then the output is at a lower rate or they have a huge capital goods balance lying with them. So in those cases, is there any provision for refund? For exporters, there is a provision, but for domestic supplies, is there any provision for refund for those? Thank you.
Thank you, Vinod. See, 2 aspects you have touched upon. Wherever, first one, like wherever there is an unutilized excess credit lying with some SSE, provision for refund is only in a situation where that credit has been accumulated on account of some inverted rate structure, other than export I'm talking about. So if the rate of tax on final product is say 12% and on inputs etc which he is using is 18%, then some credit by way of calculation, etc., is refundable. But other than that, there are no refund mechanism. But still, there is a lot of restructuring and planning which can go into it. Because if you are a multi-location entity, you are having different registrations, different places, etc. So a study need to be made first for the reason of accumulation. And then efficiently, if you structure your transactions, I mean, for very simple example, transportation as an activity, reverse charge, one rate is there, with credit, another rate is there. So whether it is 5% or 12%, this is a choice. You have to arrange with the vendor. Similarly, there are other mechanisms of ISD, distribution of credit, or cross-charging to your different location, etc. So therefore, the only recourse for SSC is a proper planning or restructuring or reviewing their transaction structure, which can be done. Because yes, blocking of credit is blocking of capital, working capital. I mean, it's as good as money. And therefore, all industries should actually explore their potential of utilizing the credit as early as possible. There are two reasons. You don't know tomorrow what provisions come and all those things, etc. So that is something which is on case-to-case basis, has to be examined and all that. The other point which you touched upon, that within 180 days, if payment is not made, then the credit has to be reversed along with interest, etc. That provision in the budget proposed things has not been touched upon. That provision remains as such. Question would be, because there it says that it has to be reversed with interest. Now, interest liability itself is being amended to say that interest should apply only when it is being utilized. So whether the same thing will be applicable for that principle, this again will be something which will be tested in the courts. In our view, yes, in that scenario also credit interest should not apply if you were having that credit with you in balance. You have not utilized that credit, etc. Because you can ask all the audience to send their queries in writing and you can forward it to us. We'll try and answer those things. Because of paucity of time, I think people were not able to raise these questions also.
Yeah,
In chat box, I don't think questions are there as of now.
Sure.
Yeah. So if anything specific is there, then fine. Otherwise,
Mr. Vamre, please go ahead.
Yeah, thank you very much, sir, for your nice presentation on direct and indirect taxes. Now I invite President Dr. Sabar Danania to say a few words to the members present. Sabarji, please.
So before telling anything to the members, I must give my compliments to Mr. Bipin Verma and the team of the professionals who have given a very, not only descriptive, but with the explanations and with the intent of the government why any tax has been imposed or any changes have been made in the customs tariff or the GST. That is very important. So with that type of clarification, I think we have very much enriched ourselves that with what intention government has done all these provisions of the taxation. This is one thing. Secondly, just I will ponder over one thing, that government once committed that they will not make any changes retrospectively from the income tax point of view. For the Vodafone case or the other cases, when they were fighting before the Supreme Court. But most surprisingly, for some very small matter of the education cess, I don't know what amount that will be involved in that, but they have gone to the retrospectively for 2004 or 5. Because that is not for any taxpayer to say, that is a very ethical thing. I think the learned firms like this, Lakshmi Narayan, they may take up with the government that you committed nothing to do retrospectively, how you have done it. Number 3, that in future, I would like that a broad view of the economy or the government, thematic view of the government on the economy, that should be also given. Definitely, we are all business, but we also try to know that where the government is taking us, why the inflation, why this fiscal deficit, this amount of 6.4%, and the all other things, about the employment. Something that can be, it may take a little more time that we can arrange. Number 4 is that I will request Mr. Bhamre that to discuss with you, and if you can print, very small version, or maybe whatever the pages it takes, in our Rubber India. So the members who could not attend, or whoever attended also, they will get a very recorded copy in our Rubber India. So that may be useful for them to refer. Lastly, that today after this presentation, our job starts, I feel, because we are always on the receiving end. But I think now the association should be a little offensive, that I should say from the 4th of February, that whatever we have not got from the budget and what we feel deserve, that there are certain cases of the inverted duty structure, maybe from GST, maybe from the customs duty, other thing, PLI scheme, which the government has given to 14 sectors, and they have got a commitment of about 30 crores of rupees, and they have notified for 40,000 crores for PLI scheme. Nothing has been given to this for this rubber sector. All these things we are to go and we are to agitate before the government before time. So for the next year budget for 23, this, when they call us in the month of the November or the October, at that time we are busy, some festive days are there, or we are busy other things. For all these times, we should plan that whatever we are not receiving or which we are aggrieved, so that aggrievedness that must be represented before the government in time. For that, I think the team of Mr. Vipin Verma, they will be helpful for us. And whatever the things, I have got certain things like PLI, some anti-dumping cases are there. Because they are saying in the law, I also fought in 2000, they told that about the injury. There are only few manufacturers of some particular material, and they get the dumping duty installed or imposed. But they are to save only 4 or 5 manufacturers with their balance sheet in the black and hefty balance sheet. They are paying hefty amount to their employees and all. And whereas about say 5,000 rubber units are there, their injuries are very large and at a very much people. But now since anti-dumping duty cases, they and act is like that, it is an injury to some person who goes there. So those, if amends we have to file anything at any rate or anything for the injury, we must think on those lines. And about some packages, like this textile, leather, they all the time getting, rubber sector has not got any package till this time. Some technology upgradation is there, some cluster wise, some facilities, those are different things. For MSME, there are certain things, where we can always say that the government announces the scheme for the banks also, but they don't listen. For some certain schemes, when that is not from the department, only not from the MSME department, if there is an obligation from the banker side to give us a moratorium or the reduction in the interest or advancing of the amount without the collateral securities like that. So those things, are there, which I think, we can discuss afterwards, and Mr. Bhamre will discuss with you so that we can, in a little more precise form, but with the full information, if you can also send it to all the members in the written form, and how we can take it forward our grievances within the next 6 months, so that when the budget comes, we should be also seeing that whatever examination we have given, for 6 months or 8 months, and what we have got the response. So that is another thing for, I think that will be better. And about, again, I will thank to the Bipin Verma and his team, that they even deliberated among themselves, and the way in which they have come out with the GST, some confusions were there, and those clarifications they are given. It is really was very much interesting and very much useful. And also, I am very much thankful to the members of the association, that if they short notice and they at least they were listening the whole webinar for more than 90 minutes. When the time passed, they must have some commitment, so they have left. For that, I don't have any grudge, but I am still thankful to the listeners, to the members, and also the Vipin Verma and his team. With these few words, I just say once again that thanks to all.
Thank you, Sabarji. I request Vipinji to propose a vote of thanks.
Thank you. Thank you, sir. And very good suggestions you have made. We have taken note of those things. What we can do, we can be in direct touch with Mr. Rajendra, and we'll make it as a continuous affair and not a one-time section on that. Whatever suggestions have been made, yes, we will work upon these things and jointly be in touch and then share these details with your association and all that. It's a continuous affair. I mean,
Thank you.
thank you. And thank you to the audience. Thank you all.
Thank you.
Thank you, Bipinji.
Thank you. Mehta, please.
Thank you, sir.
Vipinji.
Yeah, good afternoon. On behalf of IRIA, I extend a very hearty vote of thanks to all speakers for sharing with us their findings and analysis on Union Budget 2022. The speakers have very well covered all aspects of budget and also very well explained all important points regarding custom duty, MEIS, conditions for taking ITC, interest on credit availed and utilized. They had covered much more area other than Union Budget 2022 and enlightened the attendees very well. It was a very knowledgeable session. I am also grateful to the top law firm Lakshmi Kumaran and Sridharan for joining IRIA for today's webinar and giving us excellent speakers. I also thanks to all audience for being with us this afternoon and have a wonderful day ahead. Thank you.
Thank you, sir. I declare that the close of this webinar. Thank you, sir. Thank you, everyone.
Very informative indeed. Thanks all. Thanks, Bipinji.
Thanks. Thanks.
Thank you.
Thank you.